All right, Bismillah. I'm gonna do this pretty quick. Just gonna erase everything. And just kind of start with prices now. This is today, like right now, Thursday. Today, what I want to review is this Wednesday's price action. So I'm gonna ignore this here. But okay, this is the previous day's high. Previous day's high. You can do the previous day's low if you like. Well, we didn't trade anywhere near that, but have the volume imbalance down here. What else? Maybe we're watching this time frame. You have another one here. Okay, what else is there? 4 hour. And this is the kind of started like right here. Anyway, document what you see. And so why that, right? So it should be an interesting day today. Should be an interesting day. You can do anything. That's possible. Suppose this is also possible. I'm gonna go with this one. I'll go with that one. Anyway, it's not the the topic of discussion. Alright, there's fair value gaps in here as well. Right. So I'm gonna erase this. Then go here. Here. And you can see today's price action. Okay, that would be so this is what I'm using to separate midnight to give me the midnight open, the weekly open, and the 8:30 opening. All right, so this is what we're looking at. This is the 4 hour. I think I discussed before. The lowest that would go down is the 4 hour. The highest time frame level I would keep on. The lowest I would go is the 4 hour. However, I also look at the 1 hour, but I don't start adjusting things. I leave it as 4 hour. So this is the opening. It's opening for the day. Midnight open. You can already see we were bullish. Bullish here. To adjust this previous day's high. Open up above the previous day's high. And you can see this is a retracement back inside this range. Bum, bum. All right. That's a retracement back inside that range here. Something we can take advantage of on a lower time frame. But that would be the range. Bam. Right. So, how many trades can we find here? Previous day's low. Let's turn this on. Bam. So all right. You can see that fair value gap here though. Boom, boom. And it's beneath 50% of the range. All right. And that would be your entry at 10 o'clock. Stab down and probably get a better ratio, risk to reward on a lower time frame. So here's the most dynamic upside movement here. It's tiny, but and it's right. Yeah, you would have to adjust this again. What are you trying to do? Anyway. All right. You can see this level's right around the previous day's high. So now you get to adjust that. All right, below 50% of the range, and I'll use my fibs to tell a better story, more precise, more accurate story. So there you go, 78.6, 61.8 in that range there, and that would be an entry here, entry long. All right, and you also have also have a I'm gonna take this off now. You also have a 3 drives pattern or 3 Indian pattern. 3 bar or whatever. All right. 3 drives pattern. Okay, 3 drives reversal pattern. And that would be your New York kill zone. New York AM session entry right here. And this would be the start of your PM session. And you can argue that this is a bull flag, bear flag, apologies. However you want to do it. And once price broke below this trend line, boom. However, you have here, price ran this AM session high. It's my side. Ooh, what are you doing? Buy side liquidity. Trade what you see, right? Kind of feel like, so right, you had that here, the 15-minute here. So same. All right, so price ran above this high. 1, 2, 3 reversal pattern, 3 drives pattern, 3 Indian patterns, or pattern singular. So this 0 line would be your first take profit, or your first scaling out. This would be your take profit. And that would be that, you know. So first target was here. This happened, ran above this. You could use the portions of a normal price move here. Negative 27, negative 50 as a target, but 1, 2 highs, 3 reversal, break in market structure here. So you got your break in market structure, and you call it market structure shift. I took everything with me. Mostly everything. All right. All right. Same conversation as yesterday. You can see price ran above the London high, came back down, didn't quite take out the London low, but stop hunt into this 1 hour fair value gap. Came back up, took out this high, these relative equal highs here on the 15-minute. Retraced back down into below 50%. Let's test that theory. There you go, slightly below 50%. If you wanted to do body to body, then you have another entry during a lunch hour. So there you go. Turns of hit pulling down into the 61.8. Target the AM session lows during the lunch, AM session highs during the lunch hour. And then even if you didn't want to drop down, you can see price breaking market structure here. And if you stayed on this time frame, then you wouldn't have another entry until during this kill zone. However, if you use inverted fair value gaps, that price is no longer holding above this tiny one here. You can use that. Certainly that price wasn't able to hold above this inverted fair value gap, then it entered right here, right when price was bursting through it. It's a different setup that doesn't involve fair value gaps, but it's the running above the previous high. But you would have to know something like this is a reversal pattern, or determine that this was the target, the AM session high, and then kind of look for price failing to hold above that level. And here on the 5-minute you have, so that's the long during the AM session, and you have a short situation during the PM session. Same situation with this inverted fair value gap. You have one, you can see here, most obvious one, 5-minute time frame. And there you go. You have a retracement back into this inverted fair value gap. And you probably say it didn't trade back up into the bearish fair value gap. And again, inverted fair value gap. In this case, this was a bullish fair value gap. It was violated, which makes it an inverted fair value gap. And the inverted fair value gap indicates a change in the state of delivery, meaning that price was once bullish. The fact that it's holding below this inverted fair value gap is an indication that price wants to go lower. And then we drew this one out from the 15-minute. But you could actually, if you wanted to adjust it to the 5, here's another one. And you can see price respecting the consequent encroachment of the midpoint of this one, dropping from there, etc., etc. And you have one here. This is a bearish fair value gap. This is all like, you have to be dynamic, right? Moving, reading price action while the market is still going, right? And this is that old 1 hour fair value gap here. So yeah, to trade it back above it. You can also use this level, price not holding above this level here. And yeah, that's exciting, right? So price ran this high. This is the lunch hour, still part of the lunch hour, random AM session high. random AM session low and literally stabbed down into this 4-hour fair value gap. Yeah. And it's holding above consequent encroachment at this moment. So technically this is a trade here. So this would be I would look for this to be broken. Here's your shift in market structure here. And another one here. All right, so with that, so let's say we chose this one. We'll still look for price to ideally trade below 50%. Here's your 50%. So this is a break in market structure. This is your break in market structure with this candle here. It didn't pull back below 50%. Came back up, ran this high again. And then we look for price to trade into an inefficiency below 50%. So price is here. It can technically slip back down. Here's your inverted fair value gap. If you wanted to use that. So ideally you want to look for price holding above this inverted fair value gap. But of course you have this bullish fair value gap here. And you have one up here. Which is more prominent on the 15-minute time frame. Okay, but you can certainly use that. It's already 10:41, so you're not in the kill zone. So I guess we wait till tomorrow to see what happens with that. All right, so this is the Asia session. So yeah, I like this. This was all good, man. So you technically had more than, so you had a long AM session. Technically you could have traded the pullback short as a scalp. Could have traded this long because it's lunch hour reversal or consolidation, and you can argue this is an upward consolidation. So you had a scalp during lunch, and you had another day trade during the PM session, and that had the largest price run. So I'm anticipating a long here. Not sure if that's valid or not, but hypothetically, for entertainment purposes. Yeah. If it goes long, it should take out all these nice and lovely low resistance liquidity run here. Boom. Yep. Let's turn that green, money green. Guess money's not green anymore, right? Still call money green. Doesn't matter. Candlesticks are green and red. Still doesn't matter. Money green. Alright, so let's see what happens. Alright. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك.